Okay, folks, this is Israel Keys, and we are going to have a short, well, we'll see how short it is, roughly about 30 to 40 minutes analysis session this evening. It's pretty much 10 minutes past midnight my time. I live in the city of London, the center of the financial universe, and I'm recording this weekly analysis session. So just a bit of a backdrop. I usually Monday's my day off. In addition to being a trader, I do a couple of other things, business ventures and not-for-profit ventures as well. And so Monday's my day off. The weekend's extremely busy for me. Monday's my day off. And so I usually like to spend Monday resting, playing football, hanging out with my children, spending time with my wife. And for good reason too, because as I have talked on here in the past, Monday really, 6 out of 10 weeks, Monday isn't really a day you want to be too concerned with. You get the odd Monday where it's a barnstormer and the price of a pair will go 100, 150 pips. I'm prepared to play the averages and wait, because one of the keys to successful trading is understanding that there are certain pockets of times, hours in a day, days in a week, weeks in a month, and months in a year where price does pretty spectacular things, and other times when it's literally just going sideways. And so you really want to be trading on days of high volatility and days of clear directional premise. I repeat, you want high volatility, meaning you want a good range of movement, and you want clear directional premise. It's no good price being volatile if you do not know what is going to happen in that volatility. I repeat, it's no good price being volatile if you do not know what's going to happen with that volatility. So you really want to be waiting for moments, days, weeks, months where you have very clear, informed opinions on which direction price is moving or what it's doing. And those are the periods that give you high probability trade ideas. So having said that, let's look real quick now. Well, I'll leave that on the screen for you to look at this a little bit. This is a webinar and a YouTube recording that I did for beginner traders, just laying down some of the foundations and the basics that you want to know when you get into the market. So it's up there for free for those of you who are a little bit more advanced in your trading. This, if you have this is part 1 of 3. If you have a good grasp of this, and you understand what it means and why it means what it means and how to apply it to your trading, then you're pretty much going to be in good shape. So I'm going to leave that screen up there because I have plans for it. Okay, so I do not have, I don't have a bunch of people with me on the call on the webinar today, which is good because I really just want to bang through this. I don't want to, because when if I have an audience, whether it's online or live, I kind of feel their questions, even when they're not asking them. I feel the pull. I feel the tug. I can sense the hesitancy or the desire to go slower or to explain certain things. But I'm just going to do this as quickly as I can. If something doesn't make sense, feel free to drop me an email or a question in the comment section or something of that nature. So, for starters, the basics. I only trade majors, so I'm a majors trader. I don't trade the pairs or the cross pairs, except under very, very extreme circumstances. If the US dollar is doing something crazy, it means that all the majors are affected. And then roughly 1 week in every 3 months, I will trade something else other than the major because I want to stay away from the dollar. But 90% of my trading is done with the US dollar. I've got my demo account open here because I don't want you to see what's going on in my live account for good reason, because that's where I make my money and it's not your business what's going on there. So I'm going to be showing you all this with the demo. So I trade the majors, so 6 of them in total. Well, most people say 5, I say 6. So there's the Euro US dollar, it's called the fiber for those of you who are not experienced traders. The Euro US dollar is called the fiber. The pound US dollar is called the cable. The US dollar Swiss franc is called the Swissy. The US dollar Canadian is called the loonie for 2 reasons. One, slightly less benign, and also because it acts like it's crazy sometimes. Then there is the Australian dollar US dollar, which is called the Aussie. There's US dollar Japanese yen, which is called the Jappy. And then I count the New Zealand US dollar as a major. Technically, I know it's not, but I trade it because it's, in my opinion, it's significant enough in its volatility, its movement, and its volume traded to be a major. And so, because all the pairs I trade 9% of the time have the US dollar in them, I like to see what the US dollar index is doing. Again, I don't have the energy to explain what this means for the new traders. Ask me questions in the comment section. I'll try and interact with them. But if you are an experienced trader, you know what the US dollar index is. It tracks the price of the US dollar or the value of the US dollar in an index. In essence, it gives you a figure that tells you whether or not it's generally appreciating or depreciating. Most currencies have an index of some sort that does the same. If you see me looking right, actually you can't see me because I'm not putting my video in this video, so that's good because I've got several screens up in front of me that I'm moving around, so my head's on the swivel. And so if you're trading something that has the US dollar in it, the US dollar is the most significant currency in the world. It's not the strongest. Both the euro and the pound are stronger, but it's the most significant in that it's the base currency for Forex worldwide. And so every single other currency will determine its value against another currency by using the US dollar as its basis. Roughly about 65 to 75% of all the foreign exchange traded on the planet involves the US dollar. I think it's about 75% involves the US dollar. And so that's why I like to stick to the majors, because you get more than enough trading opportunities. I know some of you like to trade yourselves to sleep and you have exotic pairs like the ZAR, great, good for you. I like to stick to the dollar pairs. One, they have the most volume. Two, they're the most predictable. Three, they have the lowest spreads. New traders, ask me the questions in the comments. For the experienced trader, have the lowest spreads. And if I'm trading the US dollar, I want to know what the index is doing, because if I know if the dollar is appreciating or depreciating over the course of a week, a month, a day, 4 hours, an hour, whatever it is, whatever space of time I'm trading, if I know the direction of the dollar, it gives me 50% of the information on what to do with a pair. In essence, if the euro US dollar, if I trade the euro US dollar, the fiber, if I believe the dollar is going down today, then the EU should go, the euro dollar should go up, except the euro is depreciating faster than the dollar. And so, a mentor of mine would call this inter-asset, no, actually, no, that's my word, inter-asset analysis. I've forgotten what he calls it, but he refers to, I can't remember exactly the name now, but basically comparing correlated asset classes to help you decide or give you an informed filter on your trading ideas. And so I am primarily a day trader and an intra-week trader. I can trade swings. I can trade long-term. I don't like it. It doesn't fit my personality. I'm not cool with waiting days or even weeks to get my profit. I like to be in and out in a few hours, or at worst a few days. And so I'm going to do this analysis based on my style of trading. So if you are a position trader or a swing trader, today might actually, if you're a swing trader, this will work. If you're a position trader, this might not be the analysis session for you. I might do something similar for you. And so what that means is, unless I can see a clear directional premise in the monthly chart, I usually just hop straight down to the weekly. But I will stay in the monthly long enough to see if anything clear pops out. And if you have watched one of my videos before, you know the drill. If you don't like it, I apologize. But if you want to make money, you need to be able to be hardworking. The first thing we're going to do is map out highs and lows. Why? Because liquidity is resting around market turning points. Don't have the energy to explain why in this video, but basically stop losses are resting beneath highs, above highs and beneath lows. And secondly, momentum traders or breakout traders are looking to take trades as they pass through highs and lows. And so for the guys who move the foreign exchange market, the big banks, the central banks, institutions, the the billionaire hedge funds or the billion-dollar hedge funds, they need huge pools of orders. I call that pools of liquidity to fill their orders. And so they're going to be looking to make significant trades and move the market. You with your 1,000 pound micro, or even if you trade 100,000 pounds, are not moving the market. You're just a blip in the ocean. The guys who set the trends have deep pockets, billions and trillions pockets deep, 5 trillion daily traded on the Forex market. And so they're going to be moving in those areas. I want to wait for them to move and then go with them. So we're going to be delineating highs and lows. I have a funky color scheme. You don't need one. That's just how I work. Because when I move in my charts, you notice I don't have any indicators on my chart. I'm a naked price action trader. I believe that price itself and the action of price, as we call price action, the candles, their movements, their arrangements, their patterns tell me everything I need to know from a technical perspective. The remaining 70% of my trading is technical. The remaining 30% I get from fundamentals, and those fundamentals do not include fancy indicators. If you like stochastics, RSIs, EMAs, MACDs, all that stuff, trend lines, power to you. I don't need them. I think they get in the way. I think they can be deceitful. The only indicator I want on my chart is a horizontal line, which means a price level. In essence, all the information I need to know about what price is going to do comes from what it's done in the past. You'll also sometimes see a vertical line, which delineates a point in time that I'm interested in seeing what happens at that point or what happens when I move to that point. So you'll only ever see direct vertical lines and mostly horizontal lines because those are my indicators. They tell their price levels or blocks of time. So rectangles and horizontal lines, price levels, price ranges, and blocks of times. So let's back out the highs and the lows. If I'm on a monthly chart, I will put in a red line. So that way, even when I move down to a lower time frame, if I see a red line, it tells me that's a monthly level. If price respected a monthly level, you better believe that on an intraday or intra-week or even a swing basis, it is going to respect that level. In essence, when you see price moving during the day and it gets to a level that you have no clue, it doesn't look on your nice little 5-minute, 15-minute chart with your bells and whistles, with all your indicators, you don't understand why the price of the pair turned around like it stole something and was trying to get away in the getaway car. Well, the answer usually is it got to a higher time frame level. And so you want to have these levels on your chart. So I'm going to mark out significant levels, highs, lows, turning points in the ranges. So first of all, you want a range to work with, a point of reference. Bear in mind, this is a monthly chart. So this is 2016, that's 3 years ago. Unless there is a flash crash like happened with the Swiss franc years ago, it's very unlikely that price is going to break this monthly range in the next trading week. And I'm really just doing this analysis week by week. So that I'm very confident that this is more than enough on my monthly chart to delineate a range. Now let's make the range even more refined. So again, I don't have the energy to explain every single thing I'm doing. But if you are semi-experienced, you can probably figure it out. And if you need to ask me questions, interact with the comment section. That's not moving. I'm just going to interact in the comment section or email me. My email address is fx@israelkeys.uk, fx@israelkeys.uk. Follow me on Instagram, Israel Keys Wealth. So these are the levels that I am interested in on a monthly level. Again, they're pretty much almost exclusively highs and lows. There may be a couple of non-highs and lows or ranges as opposed to level that I put in. So that's the overall range. We're not going to get there this week. I'm just putting that there just so that you understand the principle. What we're really interested in is this. This is where price is in right now. bodies and wicks of candles, what are the significant ranges? So this is the current month we're in. It opened up here, it's moved down all the way here, and it's retraced. So in that section, price came down into this region here, into this black candle, and rejected. So that tells me that there is a significant level there. So I'm going to put that there, significant level there. Also, that also lines up very nicely with the low of this candle here. But when we get down to smaller time frames, we're going to refine those just a little bit. And I would also be interested in this level here. What have I done? In this level here. That's the low of a month, of another month, right? And if by some stroke of craziness we were to get down there, that would be important as well. That lines up almost perfectly with that as well, but we'll refine that, and this would also be interesting. So that's all I need. I'm good with that. To the upside, okay, let's take something to the upside. To the upside, like I said, monthly highs and lows are gold. They're like unicorn's breath or unicorn's hair or horns, sorry. So that is there. We crossed that already. However, yeah, cool. I will also want to perhaps draw this level. That's a short-term high. And perhaps to be pedantic, this level here as well. Cool. You might think, oh, those lines are too close to each other. When we drop down to a 15-minute chart, you see, for instance, that distance there that looks too much to you is actually, no, that is taking the mic. That's 3 pips. So we don't really need those 2 lines. That's 3 pips. So I'm going to take this off here. I'm going to take this one off. If you want to know why I'm taking that one off, ask me a question. But I think that this level here is slightly more significant than this one. 3 pips, why am I picking one or the other? Because I'm of the opinion that price is very specific. I don't think price is willy-nilly. I think it's driven by very specific factors that if you take out the spreads, the difference in spreads in brokers can pretty much be predicted to the pip. I repeat, to the pip. Yes, I said it, to the pip. Right, so we come down to a weekly chart. This is where, for me, the magic really begins to happen. Now, I can't mention every single name of every person that I've studied over the years. I have studied several price action traders, many of them legends in their own right. People like Chris Laurie, Michael Huddleston, done a little bit of research based on Michael Huddleston's recommendation on Larry Williams. And so I've learned a whole bunch of stuff through the years from other people. If I remember exactly who taught me something, I will reference who they are. If I can't remember, I'll just say I learned it from a mentor. But I learned this from, I learned this particular principle from, well, I first saw it in the marketplace myself, but I really fleshed it out from learning from the free tutorials of Michael J. Huddleston, the Inner Circle Trader. Go check out his stuff. I recommend him very highly. He's a mentor to me in this business. But that candlesticks are very, okay, let's look at this very powerfully. There's an open, a close, a high, and a low. An open, a close, a high, and a low. An open, a close, a high, and a low. Simple. So when you look at a space in time frame, you're looking at the performance of opens, lows, highs, and closes. But bear in mind that this weekly candle, if you drop down to a 4-hour chart, you put the dividers in. So this, from here to here, is a weekly candle. It's an open, a close, a high, and a low. So if you can predict what next candle will form, then on a 4-hour chart, you make bank. And this is the secret. And I can't believe that I'm giving this away. But this is kind of the secret to the way I look at the markets. Very simple. I have an analysis time frame. So for this will be the 4-hour, the weekly on an intra-week basis. I have a setup time frame, which will be the 4-hour. So in essence, my analysis time frame has to be the time frame in which one candle is equal to a period in my setup time frame. So if my analysis is daily, my setup is 1 hour. If my analysis is weekly, my setup is 4 hours. If my analysis is monthly, my setup is daily. And because I can't go any further than that, I can't go any further the other way. If my analysis is daily, my setup is 1 hour. I've said that my analysis is 4 hour, my setup is 15 minutes or 30, either will work. And simple, that's how it goes. And then I will usually drop down one more time frame to refine my trade idea so that I can measure, I can manage my risk parameters. Now, if you wondered about the significance of those monthly lines, I'll just come and show you what's happened in the past. Now, bear in mind, let's go back to a monthly time frame. So, look, except for these ones here, 1, 2, 3, 4, 5, 6. 6 of these lines, in fact, if you add, well, yeah, let's take this. 6 of these lines came from over a year ago, right? 6 of these lines are from 2-3 years ago. In this case, almost 4. Look at what's happened when price in this year. So this is a year, right? Sorry, well, let's take this year now. Look at what's happened at these levels. Actually, it's 4 hour chart I was looking for here. So look at what's happened at these levels in the last month or 2. In the last 2 months, can you see how price has respected these levels? If you're too lazy to draw highs and lows, support and resistance, and this is what I mean by refining, so I can now start to refine these. If you're too lazy to draw highs and lows of support and resistance, then you're too lazy to make money. I can't help you, right? Okay, no time to make those refinements for now. So anyway, so on the weekly chart, is there something that is I didn't capture on the monthly? Now on the weekly, my color, sorry, just trying to deal with some indigestion here. Don't eat at night after playing football. My weekly color is black. Well, amongst other things, but I'm going to use black today. Actually, no, let me stay away from black. One quick second. Let's just check. Let's see. I change this around every so often, once in a while. Let me see, what have I used for weekly recently? If you're wondering why I do have some indicators on my chart, because I was doing a webinar, which you'll see online, talking about how to put indicators on MT4 for the ones that I do use. So let's see. What did I use for weekly in this? Right, cool. So saddle brown, good. So we're going to keep that going. So where are we? What chart was I on just now? Come on, USDX, there we go. So for the weekly, we're going to change the color to saddle brown. And I want to really see this. Again, bear in mind, this is where price is. So I don't really need to be going all the way up there and down there. But in the recent price range, what stands out? Now, that there, let's see. The high of that candle is, come on, the high is 99.31. So let's adjust that, because like I said, it is quite important that we get things refined, because 99.31, because price can be very, very, very specific. 99.31, good, excellent. And this here, come on, don't do me like this. Okay, cool. So this here, I'm going to refine to the low of this candle here. So this candle's low is 97.54. I'm doing it again. I was going to be quick, but I'm starting to teach again. You know what? I am who I am. I'm a teacher, and so that's, what was that again? It's 97.54. 97.54. Right. So this is where price is. That's the current range in the high. That's the current range in the low. It is sitting in this black candle here, which is whichever phrase you want to use. Again, I've learned from several people who use different names. I'm going to call it, for lack of a better way of putting it, I'm going to call it a so demand, supply. Demand means price goes up, supply means price goes down. I'm going to call it a demand zone there. Other people call it different things. Michael Huddleston calls them order blocks. Chris Laurie calls them, I can't remember what he calls them again. So that's in there at the moment. And this is why I am not planning to trade intra-week this week. Now, last week for me was quite straightforward. Price was up there. I expected it to push down into this region here. So last week I had a clear bias. I was waiting for price to reach up into this level to find resistance and push down, and it played out perfectly. And so I knew the weekly range last week was going to be clearly down. You might have a way of figuring it out this week. I think I know what it's going to do. I cannot be sure. I don't trade in thinking, I trade in specifics. And so it is in a region where there is a consolidation forming. So I'm going to use this week for price to tell me on the US dollar what it wants to do. When I say a consolidation like this, I'm waiting for it to expand clearly in one direction or the other. So until that happens, I'm going to be a day trader this week, meaning I'm going to take each day as it comes. But significant levels to watch for as price comes to, put that in brown. First of all, let's extend this level there. Come on. Right, that's settle brown. Let's see what that candle there is. So I'm looking for the open of this candle. The open. MetaTrader can be so annoying sometimes. Come on, just tell, yeah. So the open is 97.69. 97.69. 97.69. And of course, I am not trading the US dollar index. I'm using it for direction. So actually, I really don't need to be that pedantic now that I think about it. Oh, that was the close. The open is, yeah, actually, it's a close I'm looking for. 98.07. So I don't really need the levels that refined. Actually, I just realized, remember, I'm sleepy. I'm not trading this. This is just to give me bias. So, and of course, this level as well. That there, we're going to change the properties to colors. Let's see, saddle brown. No, that's sienna. That's maroon. Where is saddle brown? There we go, saddle brown. Like I said, it helps me know, okay, we are dealing with a weekly level at this point. Weekly and monthly levels are gold intra-week. If you trade intraday, daily levels too are gold. Right, and of course, the fact that this is we also are interested in the previous week's high and the previous week's low. Also the previous week's close, which we are coming very near to. Right, and then that's all we need to know. Go down to the daily. This is where the magic starts to happen. Now, on the daily, is there anything that jumps out that we've missed? That line there takes care of that. Again, daily highs and lows are significant intra-week and intra-day, but those are easier to spot. I would perhaps add this here. It's already been respected once, but I am of the suspicion that that level there has not finished doing what it needs to do. I can't explain that, sorry. That's a trade secret. But I'm just gonna put that in there. And for my daily color is green, so see green on my chart, it's daily white. Green means money, it means go. And daily charts are spectacular in providing directional premise. Chris Laurie refers to it as institutional order flow. And he has a lot of free stuff out there where he explains what that means. So you go listen to his stuff. Good. Now, remember I said, basically, I'm trying to predict what the week's going to do if I'm an intra-week trader. Therefore, I'm going to be doing my analysis in the H4. Although this week I'm going to be taking it day by day, trying to predict what each day is going to do. And so Monday's in the books. I was right in my suspicion that the dollar was going to retrace from this level of consolidation on Monday. That's good. And I want to know, is it reaching back up into that region, or is it going to fall out of bed? What's it going to do? We will see tomorrow morning. London session between the hours of 8 a.m. and 10 a.m. will tip its hand. London session starts at 8 a.m., goes till 4 p.m. in the UK. With the first 2 hours of the session from 8 to 10 will tip its hand. But we'll be ready, whatever it decides to do. So there's several things in this area that I don't have time to explain, that worry me about prices' propensity to turn around in this region here. I'm just going to put a box there. In this region here, in that entire cluster, and so as not to, that entire cluster there, I'm going to put it in green because it's a daily cluster. Well, I'll put it in light green so it doesn't stop the daily line there from showing. So that is at least one day this week, whether it's a Tuesday or Wednesday. When price gets into that area this week, I can bet my shoes at least one day is going to give a reversal. Even if it eventually breaks through that level, there is going to be a session this week where you can make one trade and close for the entire week, shorting the dollar in that region. So if my primary three pairs are the EU, the GU, and the Australian dollar. Because of Brexit right now, I've replaced the GU cable with the Swissy. Reason being is I'm awake when London's awake, so I want to trade European pairs. I want to have one Asian pair, either the Aussie, the Swissy, or the Jappy, because sometimes I have trade ideas where I can make money overnight. So the EU, I'll be watching this week, the EU, the Swissy, and the Aussie. So for the EU, if the dollar is going down in that region, the EU should be going up in a similar region. And I'll show you that in a second, how to see if the two analyses are lining up. So My primary idea this week is that I'm looking for a short in that area, at least 1 or 2 days to give me down candles in that area. If that doesn't happen, that's fine. If price breaks through that level, we will see signs during the rest of the week. That's what it's likely to do. And so come down to the H4. So this is where the week opened. Right, it opened down there. There was a huge gap in price. I'll show you that. Well, so basically price started here, but closed there for the week, and then it started there. So there's a huge gap down there. Price went from there to there. Right, see there's a huge gap down there. It may show on a lower time frame. It probably will not. Okay, there we go. No, okay, that's not it. Let's see. Is it showing on the 1 minute chart? It may not. Okay. Anyway, but that tells me something, that there was an inefficient, or there was inefficient trading, means that there may be some unfilled orders by some of the big boys. It's a level that they are likely to want to revisit, but that's fine. So we're here. This actually gives me more of a confidence. The fact that price did this gives me more confidence. So it closed there and then started all the way down there. So that's what we call a price gap. It's like stocks and shares. There's a hole in the price action. That gap is likely to draw price into it, because price generally likes to close gaps. So I am, again, I may be wrong. Put this in a 4 hour. I may be wrong. My 4 hour color is purple. This is not set in stone, but I'm looking to, if I see that, if I see price, and I think what it's going to do is, I think it's going to reach up slightly higher, somewhere in this region. You see these levels here? Somewhere in this region. It could come all the way up to here. It could be there. It could be, it's like either in here or up there, but somewhere in that region, let's put that there, I expect a short of some sort. It could be from up there. It could be from up there. But I am expecting, again, like I said, if I'm wrong, I am not going to lose money because I'm wrong, because I'm not just going to jump in and throw a trade because I suspect that's going to happen. I'm going to be informed in my approach, meaning I've anticipated. This is the skills you need when you're analyzing. You need to anticipate, write this down, wait for confirmation, and then execute. Anticipate, wait for confirmation, and then execute. So then if you lose money because you wake up, you see price shouting in one direction, and you just throw yourself at it, and then it breaks your heart. You only jump and move like that when the moves you've anticipated. If your anticipation doesn't work, then you let it go. So you anticipate, and then you wait for confirmation that your anticipation is right, and then you play along. And so that's my preference. If you think my chart has too many lines, it does. But again, I'm not trading the US dollar per se. I'm just getting ideas from it. So I expect the dollar to rise. I would have loved to have seen, again, Monday rarely ever does this. So I'm waiting to see some movement on Tuesday. If price gets to this level and gives me a clear signal, then great. If it doesn't and it waits to this level, then great. And also I'm looking at the 4 hour highs. That's a 4 hour high there. So let me start to put these in purple. That's a 4 hour high that formed on Monday. Could be a manipulation. So I'm going to watch that very closely and see what price does when it gets there. That's another 4 hour high, but I'm going to take the slightly higher one there. and another 4-hour high here, and another 4-hour high there. So I'm watching it. Of course, that's a weekly high up there at the 4-hour level. And the other direction, there is a 4-hour low here. And another one. Let's see, this is difficult. I'll just put this one there. This is difficult because these are both lows, but they're so close together because of that gap. And this is one reason why you really don't sometimes like to be in the market over the course of a week, except you're trading long term, because going into Sunday, it just does stupid things, manipulating the markets. And if you know, then you know. So we come to a 15-minute chart, which is going to be my execution chart. No, that's not what I want. Right, so the 15-minute chart, this is Monday. Just going to put that in there. This is Monday. I'm just going to put a big M. It's Monday, and that is Tuesday. That's Tuesday, because the delineations on a 15-minute chart are daily delineations. So that's Tuesday. So Monday, this is what I like to see, where Monday is a nice, clear consolidation range. That's good. That gives me confidence that my trading strategy is working. And so I'm going to look, these are the 4-hour highs. I'm looking for reaction primarily at one of these highs there, but if it goes the other way, great. I'm looking for a reaction at these levels down there as well. So I have the levels now that I'm stalking. I'm not sat in front of my chart all day. I'm looking at these levels clearly, waiting to see. And if you want to know what I'm stalking, well, that's not for today's session. But there's certain, basically, I have certain entry patterns and certain price action patterns that tell me that a trade is valid, bullish or bearish. But I now know where the liquidity levels that I'm expecting things to line up at. And if price reaches that same level at the same time as it reaches a level on the pair I am trading that lines up with that direction. For instance, I have a significant level here. There's certain times of the day, like I said, when the London session starts, when the New York session starts, those are the 2 times that I'm usually trading. So the UK, I'm usually placing a trade between 8 and 10 in the morning during the summertime until the daylight sessions change. And then another trade, or I'll be placing a trade between roughly 1 and 3. It's when New York opens. So if, say, between 8 and 10 and 1 and 3, price gets to one of these my levels, anyone is fine. Anyone will do. Any of these lines that you see here is valid, one. But I'm specifically looking at the 4-hour levels, the highs and the lows. And if a 4-hour level is like this, it's very close to this is a week. Look at this. This is a weekly level. So I've got a 4-hour level, 2 4-hour levels here that are in very nice confluence with a weekly level. That's money. That's money. And so this is an informed guess. I would not be surprised to see price, let's insert another shape here. This for me, this week, this space here where in white, and then, or this. Or this space down there. These 2 spaces here, watch them. I can 90% guarantee that I expect price to visit them at some point this week. It might not be tomorrow, but at some point, and get a good 20. If you're day trader, 20 to 40 pips is good money. You can make a living on 20 pips a day. 20, 30, 40, 50 pips reaction in this area, one way or the other. And in my opinion, downwards, maybe upwards, but in my opinion, downwards. So that's the US dollar, or that's the US dollar index. Now, so in essence, I know what the levels are. I favor a short. I favor a rally at the start of the week, Tuesday, maybe even Wednesday, and then a short. But I'm also prepared for an initial move down and a rally north. If you're wondering why I'm wondering that, think of it. If you're going to shoot a catapult, you pull the stone back before you let it go. If you're going to shoot a javelin, you pull your hand back before you let it go. Price is the same. The market makers, the big fish that drive the market, like I said, they're trying to engineer liquidity. They're trying to find willing buyers and sellers. And so they are likely to move price in one direction, or price likely to move in one direction while it's setting up for an impulse in the other. That in itself could change your entire trading career. I've just given you the secret to taking your trading to the next level right there, and it's free. So that's my US dollar. Now let's come to the 3 pairs I'm going to be stocking this week. So I'm going to have fresh charts. Actually, I started working on one of them the other day, and then the video kind of messed up. So let's see if I can find it. 1 second. Where is it? Yeah, that's the EU. Okay. All right, that's fine. So yeah, and so I've done this already. On the EU, I've marked out certain. Well, I didn't bother with the monthly at this level, but I marked out certain weekly levels that I thought were significant, and then daily levels. Because like I said, since I am trading this chart, I didn't want to get it too cumbersome. And many times those monthly and weekly levels will be lined up with the day. So you can see these are green is day, saddle brown is week. There is no monthly on here because I just didn't bother to draw it. There's several monthly levels I could have drawn, but I just experience and intuition told me to use the similar price points on the daily and weekly swings. And so that's a weekly level here, prices. And I remember I said I would, so, okay, let's go back to the US, to the dollar index. So I'm favoring, you know what, I take that back. I misrepresented that. I am favoring, sorry, remember I spoke about that gap here? I am favoring price coming down here to start the week, but it needs a level of resistance to find the short. So it could be this, the first one looks good to me. It could be the second one, but the first one looks good to me. But I am looking for price to come back in here pretty much early to start the week. If it doesn't, it could be later on in the week, but we'll see. So let's look at EU now. Where is that chart? There we go. So, no, not that, not you. Yeah, this one. So this is the 4-hour chart. Let me take these lines out the way because they get in the way. Again, I said I started doing a video that my technology botched on. You see certain lines on my chart. I don't have the time to explain what they are, but they're price levels that I've refined that I'm interested in seeing what happens when price gets down to that point. Cool. So this is last week. These are my lines from last week. I showed how, let me show you this real quick. Last week, based on drawing those lines I showed in the US dollar, I was waiting for price to come into this level here. As you can see, that price level. And I found a nice reaction there. And so, because I expected, bear in mind, I said I expected, if you remember, I said I expected the US dollar index on a weekly basis to be down last week. Remember I said that? This is the week this was a nice rejection of a previous monthly level. See that? That was a monthly level. And so I expected the week to be bearish. It went up in that level to find some resistance, but it pushed down eventually. If I'm expecting the dollar to go down, then it stands to reason that the euro is going to go up. And so for it to go up, it's got to find some support. So it pushed down into that level. It gave a nice reaction on the 4-hour chart. And then we were long. And I showed on that video, for those who have watched it, that I took 2 day trades during the week, taking advantage. On the Monday, I took a short for very low risk, about 0.5% of my account, because if my weekly bias, my weekly direction is long, I don't want to be caught on the short side. So I took a 0.5% risk that on a trade to drop down into this level. It made me about 0.75% of my equity. And then when I saw this nice move there, I traded this move up on the demo, my demo account, this move up here, back into that level. Now this line here is not hindsight. I drew it based on what happened in the past. So that line was there to start the week. Let me show you where it came from. I refined it during the course of the week. That much is true, but the line itself came from there, from basically where the open 4-hour candle on the week, the high of that candle. And as you can see, it is perfect symmetry. And then as we started to go, I kind of refined it slightly further to the halfway point of that candle, because I saw a resistance zone there. And so that line was there pretty much from the first few hours of Sunday night. And look at the perfect price. Look, moving forward, see how that level is respected in both directions every time price goes back there. And so demo trade up onto that level, that played out. There was a retracement to catch its breath. That moved back into a different level here, which I'm not going to show. For the supply and demand traders who say that the moment a supply demand zone has been fulfilled, that you throw it away, I am telling you that you don't throw those zones away, because what price has done in the past is exactly what it will do in the future. This is a 4-hour, and so it found support in that zone. You see that zone, it didn't find support on its way down. It just pushed straight through it. My Parallels desktop keeps spitting out my Windows activation code. I need to get someone to look at it. I just bought a new laptop, a new Mac Tower to help with my editing and my webinars, and I need to get that sorted. So when that level drove price up, price seemed to just violate it going through, and then violate it a second time. When I see that happen, I'm almost sure that if my bias is long and it comes back there, it should find some support. And it did find some support here. And so this candle here, I played for another long on Thursday, and then another long on Friday. Based on my analysis, my weekly analysis, I was expecting that that would be the end of the weekly range there. And I had a level from, again, look at what price has done at that level in the past, how it's respected that level. And so I drew that level out there, refined it, and I knew that the likelihood was once price got there on Friday, it would fall out of bed, and it did. So here we are in now. So that's all well and good. So let's refine. That's the day. Let's refine this now. That's all well and good. For last week, it looks like hindsight. I don't have the time to show you, but I showed the trades, 2 or 3 of them from last week in that other video. So what do I expect to happen at this point? That's a daily level there. That's the last, because that's the last day of last week, or that was the last full body day. So price hasn't violated that to the south, neither has it violated it to the north. So that's a very important range at the moment. Put that in there. It's also a 4-hour level, even though it's a daily level as well. And so I want to start the week, I want to see what happens between these two levels. If I think the dollar is going to go up slightly, then push down. So it's going to go up and then push down, I think, to close that gap. Then I would expect price in the euro dollar to push down into this level there. So I went to that level. Or beneath this 4-hour low here, and then push up. So my bias for Tuesday and or Wednesday, I might be wrong, is this. Actually, you can't. Let me change that to black trend line, because you can't see that because they're both purple. So this is kind of my bias, my expectation. Again, nothing set in stone. And then to come back here. And this time, I think we are likely to break above that high. I think we're likely to break above that high there. Again, I use the word think, so I'm not going to put money on it till it. And so, let's just pick an arbitrary point. If price does come back down there and travel up just back to that high, that's 56 pips. Could you make money on a trade with 56 pips? Remember, these are day trades or at worst intra-week trades, meaning you're in and out of the market within 1 day or at worst 2, 3 maximum. Maximum 3 days. On a very good week, 4, no more than 4. 3 is usually a good spot and you're out. Now, like I said, this wasn't for swing traders or position traders. The swing traders, you probably are getting some insight. 56 pips on an intraday or intra-week trade is bank. If you trade one standard lot, that's $500 in that one trade on a standard lot. If you trade 10 lots, that's $5,000. If you trade a mini, that's $50. If you're trading a micro, then you're probably just starting out and learning, but still, that's $5. And if I see good support here, because also let me point this out to you. Let me take that away. That there has been sneakily. This is why I like to wait for Monday sometimes before I plan my trade ideas. There's been sneakily a 4-hour low here, very sneaky. They just kind of threw that in sneakily. 4-hour low there. So I would like to see this. And if that were to happen, it's an indicator I use. It's free. I got it from a friend. If you want it, I think it's free. I mean, I'll have to find out whether or not I can give it out. But something like that is what I'd be looking for, right? So on the equity, I set up this demo account to mirror closely the equity on one of my lives. So I usually would duplicate trades. Every live trade I'll take on the demo, but there's some trades I'll take on the demo I won't take on the live because I'm testing out some stuff. So my equity would roughly be about a grand that I would put at risk on this trade. That would be my stop loss. And if it were to travel just back to that daily high, I would make almost $3,000. I'm going to take a screenshot of that to use for future reference points and to feel happy with myself if that plays out. Alternatively, it's entirely possible that Price's idea this week is to do the exact opposite, to push up into that level, doing this colors can drive you crazy, but that could be what it wants to do, push up into that level, blow past there, and come back and find support somewhere in this ballpark. Somewhere, I would say, I don't know, somewhere in this ballpark, anywhere around here. Anywhere around here would do, somewhere in that ballpark. I'd say maybe there. So let's just take somewhere in the middle there. So any of this is a valid trade idea, and I'm just looking for it to play out. And I want roughly 50 pips. 50 pips is usually what I'm looking for on a risk to reward ratio of at least 3-to-1. So I just put that on the screen. If you are a day trader or an intra-week trader, you want usually a minimum or a sweet spot of, well, if you're a day trader, I would say you're looking for at least 25 to 40 pips on one trade. I'm going to extend that to 50 because it's not on, it's very, I mean, at least 2 to 3, at least 2 and mostly 3 days a week will give you at least 50 pips on the majors. And if you are an intra-week trader, let's take this delineations out the way so the chart's cleaner. If you're an intra-week, meaning you get in and out at the beginning and the end of the week, trader, you're wanting roughly, I'd say 40 to 100 pips. Don't be greedy. You can get more, but minimum parameters. And you want, come on, you want a risk to reward ratio of at least 3, no, I'm sorry, take it back, at least 2.5 to 1. 3 is preferable and above. So that means 3 to 1 means that you take 4 trades, you lose 3 and win 1, and you break even. Think about that. You can bat 25% on your accuracy and still break even. Do not trade one-to-one. You want to at least be making 1.5 times on your wins as you're making on your losses, and at least batting 50% if you want to be profitable. But there's no reason why you shouldn't get your win ratio up to about 70% if you actually understand price action and how the markets work. So that's that. Those levels are in. Like I said, so I want to see price do this. Let me move that so they don't look like the same shape. Right. Coming down here, or it actually could be here. And then look at all those shapes. It could be that it comes there, and then it then takes up from that level as well. That is equally valid. Actually, no, I wanted to say down there. Oh, so that's the EU. How do I know when it gives me a signal? That's up to you. I can't teach you my trading strategies because they'll confuse you. Every trader needs to have signals and a set of rules as to when to get in, when to get out, where to get in, where to get out, how much to risk, how much to hold for, and what to do along the way. That's a different video altogether. So that's the EU. Let me see very quickly if there's anything I like, because I think I'm getting very sleepy now. It's past 1:15 my time. Let's look at the Swissy. Is there anything here that stands out to me? Because of time, I'm not going to go through putting all the lines. You know where the lines are. This is one of those ones where the monthly levels now become important because we are not that far away from the old monthly highs and lows, 200 pips, 300 pips. It's not unheard of for price to travel 300 pips in a week. So the monthly levels here are actually of significance to us. That's right, there we go. They actually have significance to us. And not just the highs and the lows, even the bodies of the candles as well. Come on. The trader can be so bitchery sometimes. Something that works one moment will give you trouble. You know what? I can't be bothered with this tonight. Just going to draw a new line. And as you can see, that is the body of a monthly candle, which is why, what do you know? Drop down, price got there. And what did it do? It stalled. Welcome to the markets, ladies and gentlemen. You know what? Forget monthly. I'm just going to draw these as weekly because weeklies and the monthlies are pretty much the same. So I've shown you how I do this on the dollar index. I'm not going to repeat it here. You're just going to have to watch me work in silence. Hopefully genius at work. And if you're following my analysis, you better hope that this is genius at work and not stupidity. But I'm pretty sure it's not. Right, so, okay, we got that now. I think I can just use that instead of straightening these ones out. I can just use that. These should be saddle brown, but you know what? For the sake of time, I'm not going to go through the time of changing these old colors. They're in the wrong color scheme right now, but I will recognize them when I look at them during the week. I will know what's going on. So the weekly levels, not monthly levels, those are almost identical, so I'm not going to bother with that. Seems like a significant level. Okay, so I will bother with it. And one down there. And another here. Right, so there we go. See, yeah, there we go. So if it's arbitrary, it will work, and then it will work. MetaTrader is a very interesting. It's a very interesting. Yeah. Okay. My weekly levels, because like I said, this week, because price has been consolidating, this entire weekly range is 1,000 pips. We're not going to cover 1,000 pips this week, but we could cover 300. That's 600 pips, and where price is right now, up here is 275 pips, down here is 315 pips. It's not unconceivable. It's not more likely than not, but it's likely enough just to be prepared for it. And so we drop down to the daily. Any daily levels that I want to refine. That level is very close to that level. That level is very, I need to make the move it down a little bit. So that candle's high is 10236. 10236, 10236. Right. I would add that on the daily. Just gonna make that green. Right, I'm gonna work in, I might work in silence here because like I said, you know what I'm doing now, so I don't feel the need to repeat myself every single time I do it. That's, yeah, I'm gonna put that in there because on an intraday basis, even though they look close, how many pips difference is that? That's 20 pips difference, yeah. On an intraday basis, that would be significant enough to cause trouble if I wasn't aware of what was going on. That level as well is significant if I'm trading intra-week and intraday. Cool. So, of course, the highs and lows that are very close at the moment, I'm not going to bother with because I'll see them as they approach them and I will know to be careful about them. However, I will draw out this one. We'll draw out that one. That's, yeah. And perhaps, okay, while we're at it, I might as well just do this one as well. Okay, you know what? I'll do them all. Just for your benefit, I wouldn't bother with these ones in my own charts on my own because I'll know they're coming. I don't need the lines to see those ones. It's usually the ones from further away that creep up on you and you wonder what just happened. Why did I just see price dive or jump? it's because something from a week, a month, a year ago has come and caught everybody by surprise. Notice that right now, price seems to be stuck at a level. You see, price right now is stuck at that level. It's been there now since I've been talking for about 10 minutes. Anyway, if you don't see what's going on by now, I'm not really sure I can help you. That's all I can say. If you don't see the need for this right now, if you think this is overkill, and again, like I said, I don't really need all these levels. I'm just drawing them for your benefit. But they're obvious to me. Many of them are quite obvious to me. The ones that I'm drawing are the ones that I would miss because I'd be so focused on price during the day and during the week. And of course, come down to the 4 hour. Right, so now remember, we said on the USD, our preference was a quick shot jump Tuesday or Wednesday, and then a dive back down into that level. Could be the other way around. And so if it's diving on the US dollar, it will also dive on the USDCHF because the dollar is the base pair there. And so we would then be looking. Okay, so you see now, I told you that they put that in very, very trickily. There is a 4 hour low there that is just begging the price to reach it. There's also a sneaky 4 hour high. Well, that's covered. That one there's covered. Well, I'll put this one there. There's a 4 hour high there. There's another sneaky one here, but that's covered. You see, look at this. I wish I could drill this into your head. Right. You see this high here. That's this green line. That's why this green line's there. It's the high from the 16th of September, right? Take that divider away. Look at what happens. A price point to the 16th of September. Look at what happens when price gets to it. On the, what day is this? This was the, you know what? I can't be bothered with MetaTrader. This was the 14th of October. 1 month apart to the pip. Look, see, there's a tiny space up there to the pip. And bear in mind, this is a 4 hour chart. So if you can figure out where a 4 hour chart's going to turn, you're probably going to make 20, 30, 40 pips on a 15-minute chart. That's up. So if you are, in my opinion, a rookie, you draw a trend line and say price, okay, so that you say price broke the trend line, right? Then it retested the trend line. Look at this. I wish I could put on a video to show you my face because I can't. I've had it with this nonsense. What looks like the retest of a trend line? Look at this. This looks almost, doesn't it, perfectly like the retest. This point there. Let me show you this. This is worth this webinar. If you watch this to the end, this is your reward. Let me put this in a color that is a lot lighter. If you've watched this to the end, this is your reward. See that there? It looks like the trend line broke and was retested. But price does not understand that you're drawing a horizontal line or diagonal line on your chart. All it respects is a previous price point that was formed a whole month ago. It broke through that, and this is how you know that point is going to be significant. It affected price there. It affected price there. And then bang to the pip. Boom. how many pips worth there to the pip? 39 pips. 39 pips at what time? 8 a.m. server time, so that's roughly 6 a.m. in the morning, but roughly London morning, my time. Ladies and gents, this is why we do these things. Anyway, I'm going to take that off the chart because it's just going to confuse me. I think it's a zone, supply or demand zone as I move forward. Also, you see this other line here? See this other one here from here? This is when? This is the 1st of August. So over 2 months ago, 2.5 months ago. And look at what's happening on a 4-hour chart. Price is respecting that line. Look, it starts here, right? Goes up, hits that point, bang, it drops. See, this is beautiful. This is textbook price action. Anyway, so the week started. It's gone down, right, into this demand zone there, right? Insert that shape. This level. If we go to 15-minute chart, look at, so we actually, so on a 15-minute chart on a 15-minute chart, Friday last week. This is so annoying. No, just delete that. Friday last week, this is what was being respected. Tests it once here, price goes up. Now this is why we tell you not to chase price. This was on the 10th of October, 2 weeks ago, 2 whole weeks ago, you had a trade here where you could have risked 6 pips and made 40, right? Okay. You had another chance. Do the exact same thing. Could have risked, again, 6 pips and this time made 30. That's 5 to 1. Just think about that. That's 5 to 1 overnight. So that's, you would have gotten in, let's see. So on the 14th at 1 o'clock, so I told you New York time, right? 1 o'clock, and you would have got out. 14th, 1 o'clock, and you would have got out same day. Gents, this is actually, that's true. This is a 15-minute chart. I forgot. So in one day, in 6 hours, you could have made 5 times what you risked. If you risked 1% of your account, you would have made 5. Well, I would have gotten out here to be on the safe side, this green line right here. So that's 6 to 25. That's 4 to 1. Risk $1,000, make $4,000. Risk 100, make 400. Risk 10, make 40. That's how you build money. Anyway, so that's already happened. That's already happened. So the question is it going to just drop into that level? I think because a doji, for those of you who know your candlesticks, a doji on a 4-hour is a pretty significant. And if it drops, if it takes off from there, there's a very good chance that it will break that level into this level to reach into this level of liquidity there. So that is a this is a possibility right here. That's a possibility right there. An equally valid possibility is that it comes into this level here. right? And then does the same. That's if our hypothesis on the dollar pushing down then up is correct. On the flip side, if it does the exact opposite, we will be ready. It could push up here first. That's a valid, but if it comes there, there's a good chance it's just going to go up there, push up there first, and then drive down to that level if it's a conservative week. If it's a more expansive week, that could come all the way down into that level there. All the way down into that level there. Of course, the push-up, I'm finding the push-up. The push-up could take significantly more and go to there before it begins. This is starting to get very confusing now, but I hope you get the point. Before it begins to come down. Whatever it is, I have trading rules, entry strategies based on what day of the week it is and what time of the day it is in that day that tell me that's a valid plan, and I'm not giving them away to you on YouTube. So there we go. That looks very unclear, but you get the point. So up, down, down, up, that kind of stuff. But let's take a picture of that. And so if you drop down to the 15-minute chart, which is my execution chart, right? So we're seeing that happen. If it's going to go down, where's it going to find support? It could find support in that range. There could be more. 1 second. Just use this one. There could be something in there worth looking at. If you're wondering why I'm using bodies of candles, I don't have the time to explain. Just believe me when I say that that's where half the time I expect there to be. So yeah, that. So I've got one more. You know what? I'm just going to delete these, especially these ones there. Making the chart very ugly now. Right, I'm going to be done in less than 5 minutes. If you wonder why I'm only analyzing 2 pairs, well, when I look at the other pairs during the week, based on what I've drawn up on these 2, my eyes will start to notice the same patterns on those ones. But if I find a setup on these 2, that's all I need. I don't want to be trading 6 different pairs that all have the US dollar at the same time. Many of you don't learn anything from your losses or your trading journey because you are so spread thin, tracking several trades at the same time, that you can't get any significant feedback. I like to only be in maximum 2 trades at once, and if preferably only 1 at a time. I know that goes against how you've been trained. Fine, I understand that. But ask the professionals who trade for a living in banks and hedge funds and capital markets if any one particular trader has 10 different trades at the same time. You find out the answer is likely no. So this is a valid trade for me this week. Again, I'm not saying it's going to happen, but this is an example of what I would be anticipating Tuesday morning. An example. It is just that, an example. There's another one down there. Stress an example. Again, I'm stressing, I'm not saying this will happen. I'm giving you an example of the kind of anticipation you can, again, I don't want to give away all my stuff. Some of it I cannot give away. But feel free to ask me questions online. And if you're part of my training coaching group for new traders, getting you up and down, feel free to ask me some questions. But any one of these levels, you know, is a valid level. If price is doing that. And if it's not, like I said, we will be fine, because we know, or I know in this case, I have rules that tell me what I'm waiting for. I'm not just jumping willy-nilly into the market. So that could work. Now let's give an example of how this would work. Again, let's assume it uses that level. Again, that's 6 pips. 6 pip stop loss. And I'd make over £3,000 by the time it gets back to that level. And it could well push higher. On the flip side, I don't have the time to draw out the levels, but just try and follow them spatially. Let's assume it were to come somewhere into that level there, right? Let's assume that were to happen. In essence, it were to come over these highs here and into that level there. If depends on where I take the trade from. Let's assume I take the trade from there. Even if I were to do that, that is what? That's 10. That's wide for me on this chart. I probably wouldn't have that sort of risk. When it happened, I would see clearly, but that's 10 pips. If it then were to come back down to these levels, I could make anything up to about £3,000 again. I would probably refine that down to something like that, probably about 6 pips again. And then just getting back to this level would be 3 to 1 and more. 4 or 5, whatever, wherever it went to. So in terms of entries and exits, like I said, analysis doesn't cover entries and exits. It just helps you anticipate what to look for. Analysis helps you anticipate what to look for. And then your execution talks about your trade plan, your exit and exits, entries and exits. If you must use trend lines, fine. If you want to use stochastic divergence, great. MACD divergence, great. If you want to use a Williams oscillator, good. If you're waiting for an EMA crossover, all the fancy things that you use to help you enter and exit trades, if you want to still keep using them, now you have the basis upon which to do them when price starts to follow this kind of informed price action analysis. And with that, I have to get to bed because I want to wake up in the morning and make some money. Enjoy your week. Bless you guys. Love you all. Take care. I'm going to shut down this recording now. Bye-bye.